you need the long, and I'm going to tell you why. Well, because we're bullish. And I'm going to prove it to you, even though interest rates just keep going up. This blue line is the interest rate chart, and it's going to go down soon. You want me to prove it to you? Well, that's what this video is about. We're bitcoin-signals.org, bitcoin-signals.org, where instead of just getting this kind of analysis once every week, I tell you what to buy, what to sell, why we're going to go up or why we're going to go down 24 hours a day, sometimes 10, 20 times a day. So it's perfect for day traders, 24-hour non-sleep degen traders, and even if you're a plastic surgeon making $300,000 a year, you're going to make more money just trading with us at bitcoin-signals.org. Okay, and you don't have to use leverage, but if you do, you'll obviously make more profits faster. But leverage is optional, you don't have to. Okay, so I'm going to explain to you why we're pretty close to the top as far as interest rates go. And once interest rates go down, we're going to pump. But oddly enough, we already started pumping already. Interest rates don't even have to go up or don't even have to go down before stocks and crypto continue to go up. I told you 3 weeks ago that we hit bottom, that you need to buy, and we pumped tremendously. If you did not believe me back then, if you didn't long back then, you missed a lot of money. But you're gonna lose out on even more money if you don't long now. You don't want to make the same mistake twice, right? So you might be sitting there thinking, but wait, you might have been right before, and the 495,000 other times that you made a prediction, you might have all been right. But I mean, this time you could be wrong, right? You know, and you're thinking that because all the pundits, all the analysts are saying, well, inflation is still high, so interest rates aren't going to go down until inflation goes down first. That's what they're telling you. That's what Jerome Powell's telling you. That's what the Fed's telling you. That's what all the central bankers are telling you. And you still believe the central bankers? Really? I'm going to show you what's really causing interest rates to go up. Because if you're looking at inflation, you're looking in the wrong direction, and you're going to miss all the pumps that are going to make BlackRock rich. And you're just going to be looking up insect baking recipes. It's just the way it is. You really have to be looking at the right signals. You have to be looking for the right indications. The simplest way I can explain this to you is that you're at a bar and you want to pick up on a girl at a bar, and she's beautiful. She's sitting there and she's looking around. So apparently she's in the market for a boyfriend, or at least a one night. And you approach her and you think, after buying her a drink, after talking with her for about 15 minutes, you think, she wasn't interested in me. And then you go back to your friend, your best friend, and your buddy says, "Oh, why the hell would you think she wasn't interested in you? She was totally interested in you." And you're like, no, she didn't lean into me. She didn't touch me. She didn't do the things I was looking for. So I never asked for her phone number. And now she's leaving with another guy, taking a cab with some other guy that she met at the bar. And your best friend says, no, 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 wait. You didn't see that she kind of did this to you, showing her ear to you and showing the nape of her neck to you. You didn't notice that she crossed her leg in your direction. You didn't notice that when you were talking and it got loud in the back, she was doing this. She really wanted to hear what you were saying. You miss all the right indications. You miss all the right signals, and because you're just looking for one or two signals that don't apply in this case, because she's not an extrovert, she's not going to touch you in a million years. She's waiting for you to touch her first. That's just how introverted hot chicks work. But you missed getting her phone number. You missed taking her home tonight because you were looking for the wrong signals. And if you're expecting stocks in crypto to stay bearish until inflation goes down, because inflation going down is going to make interest rates go down. If you're thinking that those relationships are actually true, those relationships that the Federal Reserve, the central bankers told you exist, are actually true, you're going to miss all the money again. At this point, you're thinking, what the hell is he talking about? Let me show you. Jerome Powell keeps saying that inflation is the reason why we're raising interest rates. You want to see inflation? Here it is. Fred, CPI, Consumer Price Index. Let's just look at that. Consumer Price Index. This is the green line for Consumer Price Index. I'm going to hide it again. The blue line is inflation, or the interest rates set by the Fed. The Fed manually controls, they dial up and they dial down the blue line. And the blue line was flat for 9 years straight back here. You can see my arrow, right? My cursor. For 9 years, interest rates were flat. Then for 3.5, 4 years, interest rates were extremely high, and then interest rates suddenly dumped over the course of a year. You would think that if interest rates affected inflation, like Jerome Powell keeps saying, we're going to keep dialing up interest rates until interest rates cause inflation to go down. If that actually happens, wouldn't you expect it to have worked in the past, in the last 20, 30 years? Let's pull that up again. CPI, inflation. Bam. Does that look weird to you? Does that look a little unexpected to you? Look at it again. Here, look. Does this look weird to you? Inflation since the year 2000 has just been going straight up. It's just straight up on a regular basis, on a total regular basis, absolute total regular basis. And what did they do in 2004? They extremely raised interest rates to 15 freaking percent. 15%, way up here, and it didn't do a goddamn thing to inflation. The inflation line didn't even notice. Now, they dumped interest rates all the way back down, to 2.9%, 2% down here. And what happened to inflation? Meh, not much. Look at this. This entire range of time, nothing much happened. You get a little blip here, but not much. And then look at that. During this entire 9-year period of time where nobody raised interest rates, the Fed didn't do anything, inflation just kept going up. And then suddenly, Fed raises interest rates tremendously starting in 2016. 2016, remember 2016. Remember that. They start raising inflation rates at 2016 tremendously. And what does that do to the price of your beer, pizza, rice, bread? Absolutely nothing. It just kept going up. Then they dumped prices in 2019. Bam, they dumped it. And what did that do? Absolutely nothing. Prices just kept going up. So are you telling me that raising interest rates has nothing to do with inflation? What did I just tell you? Raising interest rates has nothing to do with inflation. I mean, just look at this thing. Look at it. Okay, there's like no correlation whatsoever. Zero correlation. So if you're expecting Powell to lower interest rates, causing the stock markets to go up, only after inflation starts going down, that ain't going to happen. You're going to be looking left when you should be ducking right. And you're going to get a flying sidekick to your nose. You're looking in the wrong direction. Couldn't it be some other thing? Like, what happened? What triggered this 2016 thing? Why did the Fed, Janet Yellen back then, why did the Fed raise interest rates back in 2016? Did it solve some other problem that I'm looking for? I mean, the Fed can't be lying to me, can they? I mean, central bankers never lie to regular people, do they? Let's look. I happen to have handy dandy pulled this up for you. This is the whole year of 2016, and it says Janet Yellen, the case for an interest rate hike in 2016 has strengthened. Why would she say that? Janet Yellen's speech at Jackson Hole. She noted inflation and unemployment were approaching Fed's goals. Stocks were down this morning, but risks are asymmetric with the Fed. Janet Yellen, slowdown in job market. She keeps talking about the economy and the job market. Let's see, back here. Inflation and employment. Okay, so Janet Yellen saying there's a case for an interest rate hike in 2016. Let's see if she did it. Yep, 2016. This is when she was in power. Right here, she started raising interest rates, and she did it for about 3.5 years. Raised interest rates tremendous. The Fed did. I don't know if halfway in between someone else became the Fed chair, but anyway, the Fed just kept raising interest rates for a year and a half or 3.5 years because of inflation and employment. Inflation did nothing, as you can see here. It didn't have any impact on inflation. So let's get rid of that. And well, maybe it did something for employment. Maybe that'd be a good indicator to look at. Again, it's like you're expecting her to lean in and touch you or kiss you or something, and she's giving you every sign that you should just ask for her phone number, and you're just not looking in the right. You're just oblivious, absolutely oblivious. Look at this. Unemployment rate. Unemployment rate. Unemployment rate. Back in January 10, started going down, 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 and guess what? Janet Yellen saying unemployment rate needs to be fixed, even though it's been going down for 9 years before she even made that statement. I mean, unemployment rate went from 9% down to 3%, literally 3 times less. Most of the unemployment disappeared straight through, and by the time she started raising interest rates, right here, unemployment didn't even notice. Unemployment just kept on going down its merry way. No correlation whatsoever. So interest rates rising show no correlation whatsoever to inflation or unemployment. The two reasons why the Fed chairman, right here, inflation and employment, cited that she had to raise interest rates. And now you believe Powell? The same institution, same organization, the central bankers, telling you again, I got to raise interest rates because... Is that chilling to you? Okay, now that we know that unemployment and inflation have nothing to do with interest rates, let's get rid of both of them. And let's see if it has anything to do with the stock markets. Like maybe they're just trying to make the markets healthier or something. Look. Here's stock markets. Stocks. This is actually really fascinating. During this entire period of time, when interest rates did nothing, stocks went up. Huh. Good. That's to be expected, right? But look at this. During this period of time, when interest rates started going really high because of Janet Yellen, stocks went up even harder. They literally went up even higher. And when interest rates went down just up until this point, stocks still kept going higher. It's as if stocks didn't even care what the interest rates were doing. They really didn't much. And then this entire period of time, where the Fed did nothing again, stocks went up. And now suddenly, Fed raises the interest rates and stocks go down from here to here. So you might think, well, Fed raising interest rates and stocks going down are correlated. But I mean, they're not. I just showed you back here that they're not related. So this is a phantom correlation. This is a scarecrow or a red herring. It's fake. You would expect correlations to happen everywhere. Okay, so if that's not the case, if interest rates and stocks, I mean, obviously, interest rates going up is going to make corporations have a harder time borrowing money, which affects companies' ability to recycle money. So there's not a zero impact, but I mean the impact is not as pronounced as you would think. At least not enough to destroy the stock market's value and make everybody so poor that everyone's just tuning into everything that the Fed is saying every single day. It's not that big of an influencer. So then why do they keep raising interest rates if it doesn't impact stocks that much? But it looks like it does. Let me show you. You want to see the real reason? Um, Actually, before we do that, let's just take a quick look at the US dollar. Maybe that's it. Maybe they're trying to make the US dollar healthier. US dollar kind of looks like it has a correlation here, doesn't it? Kind of looks like it has a correlation. US dollar is kind of flat and then goes up and then inflation goes up, or yeah, interest rates go up, and then US dollar interest rates go down. This is interesting. This is interesting. It looks like there's a little bit of a correlation, but look over here. Here there's no correlation. Here, interest rates went up and the US dollar stuff kept going down. Huh, that's weird. So maybe the correlation is limited. What is it that you have to look for to know that you should buy stocks in crypto? What is it that you have to look for to know that interest rates, which are laggy, interest rates, they only adjust them once a month. So something could happen in December that makes everything bullish, which it did, not December, but last month. And you wouldn't know to buy until a month later, which would give all the mega whales, all the guys, all the ruling class, a month and a half to buy the bottom because you're looking for the wrong thing. Let's look for the right thing. Look at this. This should be chilling to you. Let me see if I can make this really equal, kind of easy to interpret and visualize. Right about here. I guess that's easy to visualize. Look at that. While oil, I just gave it away. Anyway, this is oil. While the price of oil was stable and steady, interest rates were stable and steady for this entire period of time. And then suddenly, oil prices dropped for about 6 months. And that's when Janet Yellen started, this is 2016, started raising interest rates. And oil prices rose with it. Oil prices dump, and interest rates also dump. And then interest rates do nothing until right about here, because this entire zone is the mid zone. This entire zone is right about middle. Right about here. It's too big. Draw it in like this. Right about here is middle. So anything in this zone, you can see down here, they didn't raise interest rates. Until price started going to the top of this zone. Now you start seeing aggressive interest rates being increased. And again, as interest rates start being increased, what happens? The price of oil decreases. Can you see that? Kind of. Let me see if I can zoom this out. Here. Right there. This is an easy view, right? This is easy to visually compare. Right here. As soon as they raise interest rates, so oil prices go down. Interest rates don't seem to have a much of a direct impact on unemployment, on inflation, on the stock market, not even on the US dollar very much. But when it comes to oil, oh yeah, it does. Do you know why? You've heard of the petrodollar? When the Saudis, when the Arabs raise the prices of gas, making gas harder to buy for the Western world, the central bankers decide to raise the amount of money it costs to use the US dollar. Think about what that means. If you're a third party country like Japan, and you need to buy oil, you need to buy oil from the Saudis, but in order to do it, you need to first buy the US dollar. And what's going to happen is you're going to need to pay for oil for the next 6 months to a year to 2 years. So what do? You buy or you borrow 2 years worth of US dollars first. You don't go pay Saudi oil in yen. You take that yen, you convert it to US dollars, and then you buy the oil with those US dollars that you've been holding for the last year and a half, which is what the Japanese have been doing in their Forex balancing. And now their US dollar reserves are almost gone. Does that make sense to you now? What's happening is the US doesn't like being wagged around by their tail because the Saudis are raising prices to control how much the gas costs at the pump in California, in New York. They don't like when Saudis can control the gas prices and how much industry profits or loses because of the price of gas. They don't like that. So what they do is to influence the Saudis to lower the price, they increase the cost to use the US dollar to buy oil. Okay, now that you understand that, how does that prove that we're bullish? How does that prove that that's going to stop happening? Great question. Great question. I'm glad you asked. Let me show you. Oops, let me get rid of this. Yes, okay. Ah, shit. Fuck. Okay, let me get rid of that. Now let me show you. Oh, fuck. Oh, I guess I could show you this. Let me show you this. Here, look. I didn't show you these things. This is when... Oh, I guess this is actually really important. This is actually really important. I'm going to show you when they actually started raising interest rates. Right here. They started raising interest rates when Obama decided to cancel the Keystone oil pipeline. Right here. And this is when the prices of oil were down to zero. Now, remember this. When prices of oil are down to super, super cheap, America has to sell their oil super, super cheap too. America doesn't have as much oil as the Middle East, but America doesn't like having to sell discounted oil to the rest of the world. Destroys the oil reserves. So what do? You increase interest rates, the blue line. You increase interest rates, causing the prices of oil to go right back up. And then what ended up happening? At the very, very top, right here, that caused the price to dump. The Saudis really just dumped the price of oil. You remember when oil was actually negative, something like $9 a barrel or something? That was this. Yeah, I'm going to show you what happened back then. Right here, the oil tanker Hormuz attack blocked an entire strait, blocked an entire oil rig vessel transport strait. So you couldn't get oil to the rest of the world. And funny enough, right there was when they decided to crash the world stock markets with COVID. Right there at the same time. COVID was not natural. It was an engineered thing. It was an engineered war tactic to get the Saudis to adjust oil prices and open up their oil reserves for American consumption. How do you know? Let's look for more facts here. Right here. Shit. This is actually harder to do than I thought. Here, right? This is another 3.5 years. Can you see that? I have to move my screen here. Let me move my own screen. Okay. Right here. Right before they broke that 3.5 year no interest rate rise trend, OPEC reduces oil output right there. And the price of oil skyrockets again, making America have to pay really high rates to the Saudis. And what did they do? They raised interest rates again. That blue line happened to go up right exactly at that time. And coincidentally, this happened. At that exact time that they raised interest rates the last time. Haytham Al Ghais takes office as OPEC Secretary General. New Secretary General comes into play, and suddenly, right here, I'm going to lower this so you can see it and delete the rest of these things so I can highlight this. Right there. Oops. Let me lower it even more. Yep. Right there. You got a brand new Secretary General for OPEC, and he's not going to play softball with America, so America raises rates. Okay? If she does this, she crosses her legs in your direction. She actually wants you to ask for her phone number. She's not going to touch you. She's not going to do the things that you're thinking. Look for the right signals, and you know that this is why. This is the real reason why the Fed raised interest rates. Well, how do I know that the Fed's going to drop interest rates now then? Okay, that's the good question that we're going to go to right now. I'm going to remove all these things. Shit. Oh, damn it. Here. This is why. Let me get rid of this. Here it is. Are you starting to see it now? Right about here. What we had was a classic falling wedge on the price of oil. The price of oil started decreasing since 2017, mainly thanks to Elon Musk and electric cars and electric this and electric that. We had a fake out at the bottom, and then we had a pump. But this here, this is an absolutely pure technical pump. This is a technical pump where we retest the 718 fib line of the top. This is a double top, guys. This is literally a double top. And if you look even closer, shit, here it is. Okay, here. If you look even closer, what we have on oil is an ascending broadening wedge, and it already broke out to the downside. So what's going to happen is the price of oil is once again going to decrease down here. And when the price of oil goes down, guess what? Interest rates are also going to go down. But all the smart guys, all the BlackRock guys already know this. So that's why they're buying stocks in crypto. They're not waiting for you to think. They're not waiting for you to get bullish to start buying. They're buying now because they already know what's going to happen in the future. And now you do too. Let me change the color of this. So instead of waiting for me to tell you these things on our free public YouTube channel once a week or so, brown. There we go. That's what it's going to look like. You should get these updates straight to your cell phone or your desktop. We use Telegram, by the way. Just download the Telegram app if you haven't already. And I'll tell you, 24 hours a day, 7 days a week, 10, 20 times a day, that you should buy or sell, and we micro scalp too, so you can make tons of profits just in a short 8-hour period of time. But hey, screen capture this if you want. Screenshot this. It's not a bad idea actually. Screenshot this, and it's gonna happen. See you at bitcoin-signals.org. And subscribe to this YouTube channel so that you can get more of these in-depth technical and geopolitical game theory analyses.